Hi traders, you're welcome. So today we want to talk about how to place trades. Depending on whatever platform you're using, you will definitely have like a position tool, and a position tool is going to look something like this. Okay, so you have position tools for long position, short position. Long position is when you're buying in anticipation that the price goes up, and short position is when you're buying in anticipation that the price goes down. So I have start this as my favorites. By the way, I'm on the Tradingview interface. I use Tradingview to plot, to chart my graphs and all. Then I can then go to either Binance or Bybit or whatsoever to go and place the trades. So, but for you to understand your targets, your stop loss, properly calculate your entries and all of that, I prefer to chart on Tradingview. It's more professional for me, my own regard, and most top professional traders actually use Tradingview. So let's get to how to place a trade. Now, let me just shift this to the side. So let's say, for example, you want to trade this right here, and I say, okay, enter once the price is maybe 15203. This is where you would see the price over here. That's where you see the price of the present movement, the present price movement of that particular asset. All right. So once you just place this cursor on it, you'd see it would lead you to the price of that particular asset. So let's say we want to enter this trade for a long position. That means we are buying in anticipation that the price will go up. So what we'll do is, if we're entering on maybe this particular candlestick, we can choose a long position. We'll come to the position tool, you click on long position, and you place it right here. So the line is at the closing of that particular candle. So once you do that, which I've done right here, now you're seeing that this position tool has already come up with the stop. That means where the stop is for the pip or the tick size, and the target for the pip or tick size. Now, for those asking what reward to risk ratio is, this is where you see the risk to reward ratio. Here it is highlighted as 1. So if I say take a reward to risk ratio of 1.4, all you have to do is pull this over till it turns to 1.4. Right there, you have it. Reward to risk ratio is 1.4. So that means that your profit is 1.4, while as against your risk of 1. So that's 1.4 to 1 reward. Let me explain that again. Let's say this is your risk. This is how much you're risking in your account. Let's say you're risking $10 for this trade. You know that there's a possibility you might lose $10. Your reward to that risk is 1.4. So that means that you're going to be making $10 plus quarter of that $10. So that is the risk to reward ratio. So that is how it is. Now 1.4 is definitely higher than 1, right? So 1.4 is definitely higher than 1. So that means that you're going to be making more profits than what you're risking. That's the meaning of risk to reward ratio. Now, when I talk about maximum exposure or something like that, let's say you're trading with an account where you have so let's say you're trading with an account of maybe $10,000 or something, and you want to risk just 1% of that per trade. Now, per trade is different from overall. Maybe you want to have like 3 trades open at the same time. All right. So, but per trade, you're saying, okay, professionally, you're not supposed to risk more than 10% of your entire trading capital. So let's say per trade, you now want, let's say you have $1,000 and 10% of that is $100, right? So you're not supposed to risk more than $100 overall on your trades. So if you're risking 10% overall on your trades, that means that 1% is what you risk per position if you want to enter into 10 trades. Now let me go over that again. You have $100 for risk on a $1,000 account. You are risking 10% of your capital. So, but because you're risking 10% of your capital in general, does not mean that you are risking, you have to risk that whole 10% on a singular trade. You might risk that 10% across different trades. So you might have a trade that is open 2%, and that trade open 3%, and that trade open 4%, and that trade open maybe 1% or so. So altogether you have 10%, which will then accumulate to the overall risk on the entire trading capital. Now that overall risk is what we call the maximum exposure, but that maximum exposure is definitely different from your risk per position. Your risk per position is the percentage of that maximum exposure or of the trading capital you are risking in a particular trade. So I hope that is clear, and I hope you'll be able to implement that. So if you're trading with $1,000, definitely some people will go and put the whole $1,000 in a particular trade because you're in a signal, but that's very wrong. Decide the maximum exposure, decide the overall risk you want on that particular one, then divide it per trades. All right. So if you're risking 10% of your entire capital, then you know that per trade, maybe you want to risk just 2% or 3% or 4%. That is the only way to become a profitable trader. You cannot risk all your capital in a trade. And this is why most traders will tell you that you need high capital to trade, because by the time you start looking at all these percentages, you start saying that for you to make good profits, you need a reasonable amount of capital. With that being said, for those asking me the minimum they can start with, I'm not in a position to tell you that you know your capital, you know your finances. At the end of the day, it's your money, it's you that is risking the money. All I can give to you is the calculations and the probabilities, and then you make that decision on your own. So for those who don't understand what I meant by QTF or splitting your QTF into different aspects, we did a video on that in the website. It's available on the website. We did a video on that, and it's available on the website. So make sure you watch it and then watch this video on how to place your trades. Placing trades is actually very simple. If you want to place the short position of this, I can just click on this right here and delete it if I want to. I can just delete this and then come over here to the position tool and then click on a short position, place it where I want it, maybe at a particular entry candle, and then adjust my stop loss. If I want to, I can increase this, I can reduce it, I can increase the target to get my 1.4 to 1 reward to risk ratio, or 1.3, whichever way you want, it can be adjusted. Now, for those that were asking about EMA and all of that, I want to quickly brush over that before I finally end this video. Here we have the indicators tab. And if I tell you to get an EMA here, you are looking for the moving average exponential. So exponential moving average. So you just click on this to add it to your chart. If you need this right here, let me move this down. This right here, this red line you see right here, this one right here is the ATR indicator. Okay, so if this is the average true range indicator. To add this to your chart, you simply come over to indicators, search for ATR, which is average true range, and then you just click on it to add it to your chart. If I click on it now, it's not going to do anything because it's already on my chart. Now, for the last one, which I told you to add to your chart, is the RSI. This is the RSI right here. Same way as well. You just come to the indicators tab, look for RSI. You have relative strength index and all, and then you can just click on it to add it to your chart. So if I tell you to adjust certain parts of the indicator, what you can then do is come here, click on this setting icon. I told you to adjust the length of this particular RSI. So to do that, you just come over here and see here we have MA length, where we have the length. So this is presently an RSI 14. I can decide I want it to be an RSI 10 and then edit it and click OK. But I don't want to change this right now because I'm monitoring something. So I'm leaving it at RSI 14 and I clicked OK. And that's it. We have an RSI 14 indicator right on top of the screen. So that is that about the indicators, the position tools, how to calculate your risk and place your risk to reward ratio. So to place your stop loss, you just, look at this in relation to the price point over there. And you also look at the bottom here for your targets in relation to the price point over there, depending whether you are using a long position or a short position. So that's it for today. Thank you very much. And I hope I've answered your questions in this video. Do have a wonderful day. Bye.